Okay. And we pay our respects to their elders, past and present. I'd also like to welcome and acknowledge Damien Moore, past president and life member. Welcome, Damien. And thank you for joining us today as we host our special guests from the International Ethics Standards Board for Accountants, also known as IESBA. Today, we're going to have a presentation from our special guests, Gabriela Figueiredo Dias, Channa Wijesinghe, Professor Jans Pol, and Jeff Kwan. This will be followed by a panel session moderated by the IPA's CEO, Andrew Conway. If you don't know him, he's just there to the right. And hopefully some time for questions for the audience. Before I introduce our guests, I'd like to make some brief comments by way of introduction. As many of you will know, IESBA is an independent global standard-setting board that serves the public interest by setting high-quality international ethics, including independent standards. These serve as a cornerstone to ethical behaviour and public trust in financial and non-financial information, which is crucial for well-functioning markets. The IESBA Code has been adopted or used in more than 130 jurisdictions around the world, either through legislation or local professional bodies. In this session, we will be covering three primary areas of work for IESBA, being international ethics standards for sustainability assurance, the first comprehensive suite of global standards on ethical considerations in tax planning and related services, and a new work stream commencing 2024 on firm culture and governance. This last stream is especially critical at a time when our profession is still emerging from one of its most challenging periods, where we have gone from a global pandemic to what appears to be a global crisis of trust. Against this landscape, IESBA's guidance will be essential to finding the light at the end of the tunnel and in restoring the trust on which our profession relies. In the meantime, we mustn't forget our profession's pivotal role in shaping financial landscapes and ethical frameworks that underpin global economic systems. Now, it's my pleasure to introduce our guests. I'd like to firstly welcome Gabriela Figueiredo Dias, Chairman of IESBA. Ms. Dias also serves as the co-CEO of the International Foundation for Ethics and Audit, which houses IESBA and the International Auditing and Assurance Standards Board. She became Chair of IESBA on 1st of January 2022. Ms. Dias has extensive experience in international standard setting, legal and regulatory structures and governance, and academia, and has made significant contributions in various fields. She served as the Executive Chair and Deputy Chair of the Portuguese Securities Commission, as a board member of the International Organisation of Securities Commission, or IOSCO, and the European Securities and Markets Authority. She was a member of the Portuguese National Council of Financial Regulators, Vice Chair of the OECD Corporate Governance Committee, and numerous other positions. Goodness me, I'm already tired. Ms. Dias holds a bachelor's and master's degrees in law and has undertaken extensive academic research in several universities in the UK and the US. Next, I would like to introduce IESBA Board Member Channa Wijesinghe. Channa is currently the CEO of the Accounting and Professional Ethical Standards Board based here in Melbourne. He has represented Australia's interests at IESBA's National Standards Setters Group since 2009. He is also the chair of the Firm Culture and Governance Working Group and a member of other IESBA committees and task forces. Channa has worked in public practice at EY and Deloitte and at ASX-listed AGL. I also welcome Professor Jans Pol. Professor Pol is a former IESBA member, having retired from the board in December 2023. He's chair of IESBA's Tax Planning and Related Services Task Force. He serves as a non-executive director and audit committee chair in several medium-sized companies with global activities. He works in an expert witness, which is very expert, and arbitrator in international arbitration proceedings. Professor Pol teaches law and regulation at the University of Ulm and has served as managing partner of a medium-sized accountancy and law firm for 20 years, and was European chair and board member of the International Accounting and Legal Network for many years. Professor Pohl holds degrees as a public accountant, lawyer and tax advisor in Germany. Finally, I would like to welcome IESBA Director Jeff Kwan. Jeff oversees IESBA's firm culture and governance workstream and is also part of the staff team on its sustainability project. In previous roles at IESBA, Jeff managed a number of technical projects and work streams, as well as the strategy and work plan 2024 to 2027. Jeff began his career as a lawyer before gaining a broad range of technical and management experience from his roles with the National Australia Bank, Ombudsman Victoria, and the Commonwealth Department of Human Services. He holds a double bachelor's degree in law and commerce from the University of Melbourne. Ladies and gentlemen, that is an impressive lineup of talent. Would you please join me in welcoming our guests? I'd now like to invite Ms. Dias to start the presentation.
Good morning to all of you. Can you hear me? Yes. Good morning to all of you. Thank you very much for offering us your precious time this morning. It's a real pleasure to be here today. I want to start by greeting and thanking Madam Chair and President of IPA for this invitation and for the very kind words just addressed to the IESBA and to myself, and also the former Chair of IPA, and greet you all for the great work that this institute does. It's really a great pleasure to be here today. And I'm saying that not just because I'm here in front of you, but because this has been an amazing week in Australia for us. Amazing from many points of view. It is still a very packed agenda with very many meetings, but the takeaways and the memory and the feedback that we will take with us back from this week, it's very impressive. This is a very sophisticated population, if I may say so, in the accounting system or ecosystem. The very open, substantive conversations that we have had will for sure shed light on the road ahead, the challenging road ahead for the years over the next times. So we value these moments. Outreach and conversation, dialogue, interaction with our stakeholders is a critical part of our work and of the success of what we do. We develop ethics standards, and developing ethics standards is not an end in itself. It's a means to serve you, to serve economies, to serve the markets, to serve the public interest. So we can for sure not get there successfully without this feedback, without embedding in what we do, your perceptions, your needs, your questions, your concerns, your criticism when necessary. So I hope that this session will allow us to have a very open conversation. And we will make a presentation, not me, but my colleagues, a presentation, but the objective is really to hear from you more than you hearing from us, even if we need to tell you what we are doing. Very quickly, and I'm going to spend only 2 minutes more on these initial words. What the IESBA is suggesting to do this morning is to tell you about the main topics that are keeping us awake at night these days: sustainability, tax planning, and firm culture and governance. We are at different stages in these projects or work streams. Tax planning is final. We published the final and new ethics standards for tax planning on the 15th of April after the certification from PIOB. And this was really one of the most important topics that made us decide to come to Australia because it is necessary at this point in time to roll over these standards, to make our stakeholders aware that they exist, make the standards known, explain them, and discuss with you what can we do for the right implementation and the purpose of these standards. In a nutshell, the purpose of these standards is to uphold ethical behavior in tax planning, and my colleague and friend Jens Paul will tell you much more and much better than myself how we plan to get there. Then we want to speak about sustainability. Sustainability, we have just we exposed our proposals in January. The consultation finishes today, but we will be flexible. If anyone, namely in this room, will still want to send your comment letters and you need 1 week more or 2 weeks in addition or something like that. We very much hope to hear from you. This is a critical project which was developed in a very accelerated pace due to the timetable or the timeline that was set up not only by the regulators like IESBA Financial Stability Board, but by the market itself, which will need as soon as possible to have a strong baseline of ethics standards to support the global infrastructure of standards for sustainability reporting and sustainability assurance. And finally, we will talk about firm culture and governance. And this is a very important topic that we are just starting to address. It was identified as one of the 2 strategic topics for the next strategic cycle, 24-27, something that will keep us very busy. It's very early days. We don't have any answers or any decisions made in this respect. The only decision is that we are going to explore this topic with you, of course, and in the best way possible to try to identify any possible gaps in this space of firm culture and governance, which is might be creating some room for some less ethical behaviors, and where and if the IESBA can do some work to help overcoming these gaps. This is the agenda for this session. I'm going to stop here and give the floor to my colleagues. Thank you very much for your attention, and we'll be ready to respond to your questions. Thank you.
Thanks, Gabriela, and good morning, everyone. So I'll take you through the first couple of slides, or maybe more than a couple, and then Jens will do tax. So moving, where do I need to point? Awesome. Okay, so so these are the 4 topics: the strategy and work plan. I don't know. Okay. Yeah. Thank you. So first I'll talk you through some slides on the IESBA strategy and work plan. So the areas of focus that IESBA identified were, as Gabriela said, the 2024-27 period. We can see 2 burning platforms. One is firm culture and governance. And this is because during the strategic work plan consultation process, people wrote into IESBA and said that there are recurring instances of firms behaving badly, the ethical cheating on the ethics exams that was recurring all over the world. About 6-7 years back, we had the issues in the UK, which led to a number of reviews and reports being issued. And then there was South Africa, and as you all know, there's Australia. So that was identified as one of the strategic priorities of the board, and a working group was created in December last year, and I'll get to some slides on that. The second one was extending the impact of the code. So for those who had a look at the sustainability ED, you will see that in respect of sustainability assurance, that it's not only accountants, we are covering non-accountants as well. And that was due to a call from IESBA in September 2022, where IESBA wanted both accountants and non-accountants covered. And the logic behind that was in different countries, different professions dominate. So in Australia, it may be accountants who are dominating, but in Korea, it is non-accountants who are dominating sustainability assurance space. and they needed a global one standard for ethics and independence, and then for assurance, right, standard. So, in respect of the reporting at the moment, in the sustainability, it talks about the accountants, but there is some call for extending the impact of the code beyond accountants. So that's something the board will look at in the future strategy. So those are the 2024 work streams, sustainability and experts, and I'll get to sustainability shortly. The CIVs, pension funds, and investment company complexes, that's just started off. The board is also going through a phase of change at the moment. And for those who know what the monitoring group reforms are, Andrew will be quite conversant with those. It has been a long debate. So one of the things was that the board to step back and become more strategic and for the staff to lead the projects. So the CIV's pension funds will be the first one, which will be a staff-driven project. So they have just started work on that. So let me go to firm culture and governance. So I've covered the background, I think, the strategy and work plan. There was strong stakeholder support for this. The Public Interest Oversight Board that oversees IESBA also provided strong support for this project to go ahead. And at the March 2024 meeting, the board considered the terms of reference, and the terms of reference was approved. So some of the key four things, the objectives was to gather first an understanding of culture and governance and their impact on compliance with ethics and independence requirements in firms. The second one is to review the extant provisions. So there are about 5 or 6 provisions in the current code that talk about the tone at the top, the leadership of firms, and then when you get to the professional accountants in business, the leadership of organizations. So it's not that there's nothing there, there are a few provisions, but is that enough? Then raise awareness of issues, something like what we are doing today, speak to the stakeholders, raise awareness of these issues that is areas of concern, and finally develop a report and recommendations to the IESBA. So the working group is currently going through a process of talking to various stakeholders and gathering information. And then ultimately, the aim is by the end of this year to come up with some recommendations to the board. So at the March meeting, we also got 4 external presentations to the board from the UK FRC, have experienced some of these failings in the past. The South African IRBA, the regulator of auditors in South Africa, an Australian tax office. They also made a presentation. Second Commissioner Jeremy Gershon made a presentation with the Deputy Commissioner Rebecca Sent, and then Professor Romana from Oxford. So somehow we identified sort of from these presentations, there are like 7 themes that were identified. The first one is, who is the true client? Do you understand who the true client is, particularly when you're providing services to the government? Do you understand that it's not really the client in front of you, it's actually the taxpayer, and that public interest should be a high priority when you're providing those services. The second one was international firms. Are they really truly global firms? Abiding to the highest standards, or are they a collection of network firms adhering to local requirements? So what we mean by that is, if there is 2 jurisdictions where the service crosses, and one has a higher requirement and one has a lower requirement, do the firms go for the lower requirement? And the third point is incentives really matter. That is, Are they really chasing revenue? And have they become too corporate? And it was put to us, are they really CEOs or are they chief revenue officers? So we know incentives drive behavior, and if they are set up to chase revenue, then that's what they will do. The effect of weighting of audit versus consulting. So generally with audit, there's more compliance driven and they take a longer term view, while consulting might have a shorter term view. And so what is driving the partner's mindset? Then the fifth one is, does governance break down when it reaches a certain size? I think in Australia also there is now a lot of debate on partnership size. Why is it accounting partners can go up to 1,000 when others are 400 or 200? What's so special about accounting? The challenge of managing rainmaking partners. So there have been instances or examples given where rainmaking partners who seem to comply with the organization's policies and procedures. Then the transparency mechanism, what we mean by that is the internal and external signaling of consequences. So if some partner has done something wrong, are they quietly reprimanded and changed into a different division, or are they publicly penalized for the wrong behavior? Then the compliance mindset versus ethical principles. Our large firms tendency to follow rules, losing sight of the true ethical value and what is the right thing to do. So those are some themes that these four presenters identified. So these and other areas will be things that the working group will have to look at. So the way forward, the terms of reference was approved. There'll be some feedback on this initial engagement in June 2024. We are working towards preliminary findings in September, and then a final some recommendations in December 2024. I'll now quickly go to sustainability. So as I said, the sustainability journey for IESBA started in 2022. In June 2022, in September 2022, we had the IESBA statement, and IESBA is operating, they are the global regulators operating in 100 countries. So when they make a statement, it's quite powerful. In December 2022, the board approved the projects, and then in March last year, we had global roundtables, and one of them was held in Sydney as well. And then the EDs were approved by the board in December 2023. In global standard setting, that's very fast to come to start and come to the end of the year and have a ED. But there was no real choice in the matter because the IESBA who do the reporting standards had already finalized the reporting standards. The assurance standards set by IESBA were ahead of us, and so we were essentially catching up. So we had no choice but to do this in this fast time frame because you have the reporting, you have the assurance, but you need to underpin it with ethics and independent standards. So some things on the sustainability exposure draft. As I said, it's the independence provisions are professionally agnostic to fit all sustainability assurance practitioners, and it's equivalent to the audit standards. And what we mean by that is for those who are auditors, you have to use Part 4A of the code for the independence requirements, and this is equivalent in that sense to Part 4A because Part 4A has been used as the base for this. And there's a new Part 5 of the code. So that it's easy for people to follow. So those of you who are familiar with the code, there's only up to part 4 currently. This will be a new part 5. And if you're doing sustainability assurance, then you just need to go to that part 5. That makes it easier for other practitioners as well. It's framework neutral, so we don't mind whether you're using the IESBA standards for reporting, the GRI or any other reporting framework, or for assurance you're using the IAASB framework or the ISO framework. So it's framework neutral. Ongoing public consultation. So officially, as Gabriela said, the ED closes today, but she has given you extension if you are interested. So we'll be, I think for the June meeting, there'll be some initial work done on the high-level themes, but it will probably be the September meeting when the board gets a chance to look at the more detailed comments. There's been a lot of outreach activities, as you can see, Toronto, Brussels, Tokyo. So in the last month, Gabriel has been in Toronto, Brussels, Tokyo, Sydney, and Melbourne. And so you can see how extensively she has traveled to spread the word about the sustainability and the expert CDs. And one location that's missing there is we also covered Singapore. Jeff and I did Singapore a couple of weeks back. So there's been extensive outreach. From what I think there's one area that is emerging as quite controversial, and that's the value chain. And that's dealing with the scope 3 emissions and the requirements, the proposed requirements and guidance we have put in is causing a bit of controversy. I think I've covered that. And I'll give it to Vince Paul for the tax planning standard.
Thank you. Thank you. It's a really great pleasure to be here this early morning and to talk about tax. And talking about tax in the context of the IESBA code is, if you're just looking at the extant code, only a non-assurance service. So there is no mentioning of this very important service line of tax in the code. Yes, we have the fundamental principle, we have the conceptual framework. So principle-based, there is no need for any mentioning of tax. And so that was also the starting point of our discussion, because as you know, there were some incidents in the last 5 years globally. We had Panama Papers, Paradise Papers, LuxLeaks, Rwanda League, and many other cases. And without planning from our side, we had cases in Australia just recently. But to see our timeline was a little bit different. We started with the project and the working group in 2019, shortly before COVID, and had a little bit time to outreach activities virtually to all the world, we can say, to understand the issues. Many practitioners said, oh, it was a problem of the last decades, but nowadays it's not a problem, especially from bigger firms who heard that. So they might be quite open. We had some criticism, why to handle an issue which is not an issue. But we thought, especially after this policy and public outcry, after each and every incident, even though often not accountants were involved, but corporates, lawyers, or I would say tax advisors in a broader sense, we thought it's important because it has reputational impact to the whole profession. If there's a tax scandal and professionals are associated with this tax scandal and people are only referring to a very abstract code, it's very difficult to explain what are the real threats, safeguards, factual circumstances in such situations. And especially tax planning is a quite international subject matter. And you have witnessed how many activities G20 and other global OECD, global organizations have tried to have on a worldwide basis some consistency. And we thought it's important that also the profession is providing something. So that's a little bit the background why we have done this exercise. We started as a task force, as Channa was on board, late 21, and then we had an exposure draft, and as mentioned in December 23, we finalized the project with a board decision and the PIOB, which is the oversight board, which is looking whether we are following a due process and acting in the public interest, certifies its final pronouncement. So it's the first global ethical standard on tax planning, as I mentioned. So this alone, I think, is a significant advance in public interest, because we have now something to document, and it's just in time for the discussions we had not yesterday, but the day before in Sydney in the Parliament, in the parliamentary commission to investigate and understand the background of the incidents here in Australia, to talk about this, because it's more, how to say, crispy, more focused on a specific issue and not too abstract. So it sets a global benchmark to drive consistent ethical behavior in tax planning. And we try to establish clear and robust principles and demonstrate how to use the fundamental principles and the conceptual framework in the specific context of tax planning. And by the way, we detected that even in global accountancy firms, there was in the past, I call it a diversity in practice, because it's a very abstract code. The extant code is very abstract. The detail might differ in the interpretation of certain standards in a certain jurisdiction. So by that, we think we have also raised the bar of ethical behavior. Nevertheless, I would say a prudent practitioner would say, oh, it's the obvious, but it's now written on paper or electronically, and you can say now, that's a standard. That's what we think is right or wrong. And that's why perhaps in some cases this might also have risen the bar of ethical behavior. I will give you only a short overview. It is a new section in the code. It's a 280 for public accountant in business and 380 for public accountant in public practice. So here are just some highlights. So we're describing what is tax planning, and we are making clear it's not about tax compliance. It's about consulting work in the context of planning the taxation for clients. And we included related services. A very controversial and interesting discussion was the role of a PA with the term acting in the public interest, which is, as you know, in each and every code of ethics for professional accountant, paragraph 1 or at the very beginning, and everyone agrees, nodding, but what does it mean in the context of tax advice in general? Because we have to act in the interest of the client. There is an expectation from the public to do something right, to be part of a system where the taxpayers have a right, tax authorities have a right. So it's a difficult definition, and as we detected, in certain jurisdictions there are also different public interests, plural, or especially if you're cross-border acting, what is public interest of your jurisdiction might be against public interest of another jurisdiction. So some challenges are here. So we try to describe first, it is in the public interest that a professional accountant is helping the client to navigate normally complex tax systems. And we had also agreement with tax authorities on that. For example, in Scandinavia, the tax authority said to us, if we would not have a proper accountancy profession, we would have to increase inspectors, staff, etc. They are helping that the system is working. So that's in the public interest, advising the client. But there are limits, perhaps. What is perhaps in the interest of the client might be seen as not so good from another perspective. So this, but just to describe this conflict is important, I think, to make us aware that there is a expectation from the public also in our profession. And you see with scandals, the profession is losing trust. And by establishing proper principles or guiding materials, we want to restore this trust. Another point which is not an issue is tax planning is only possible where we are complying with laws and regulations. So no CLA is not an issue. Red zone is not an issue. We just wanted to highlight this because it is a very important part of the code, but it's not part of this standard because it's in another section of the code. We have to comply with laws and regulations. We also wanted to highlight that it's the first responsibility of management of the client or those charged with governance to make the right decisions. It's not the accountant making the decisions for the client, but as an accountant, we want to enable our clients to make the right decisions. So the scope of our advice has to be has to reflect that we are advising the client and showing the boundaries, the pros and cons, and then it's the decision of the client to be made. It's quite difficult in an international arena to define what is the right level or the right behavior concerning a certain tax strategy or a certain tax advice. So it's very easy to, we are taking always a picture, there's a green zone, everything is okay, and there's a red zone, fine. No and yes. But what is in between? The so-called gray zone. We are all aware of this gray zone. Sometimes it's dark gray, lighter gray, and we have to dig deeper to understand why this lighter gray makes they take the conclusion acceptable. This may differ from jurisdiction to jurisdiction. And some people are saying we do not like aggressive tax planning, but we heard from our American colleagues to be an aggressive tax planner is something good. But in other jurisdictions, I mentioned Scandinavia, they would say no go, no aggressive tax. So there is no definition what is aggressive or not. It's a cultural, behavioral issue. So we didn't want to say they are right or they are wrong. So we tried to define a new term for global purposes. You have to see how to implement this on local and national levels. We call it to establish a credible basis. The Americans are saying if I have a 20% chance to get through, it's fine. I don't know how to calculate 20% against 19 or 21%, but that's an American issue. But I think it's important to notice this is only allowed in US if you are disclosing at the same time this arrangement to a tax authority. So then it's okay if it's not hidden somewhere. And by that you see we can't say on a global basis it's 51% or 79%. We said credible basis, and that has a jurisdictional impact. And if you're in more than one jurisdiction, be aware what is credible in your jurisdiction might be dodgy in another jurisdiction. And many of the cases we have seen in the past were exactly where accountants or lawyers use the one jurisdiction from the perspective from your own jurisdiction and have not made a, how to say, we call it stand back test. What is a full picture? So it was a little bit of cherry picking, and then there was a public outcry, yeah, because it can't be a double no taxation, it's not possible, not acceptable. Perhaps, and that is another important point, some years ago, if you, as an accountant, have detected a hole in a legislation, people would say, oh, he's very clever. Let's go for it. In many jurisdictions, that is seen as not acceptable anymore, because you have to look at the papers of the parliament, what they wanted to regulate, of the history of a document, of some new decisions of certain administrative courts or high courts where there is a trend to go in another direction, and what would have been right in the past or was right in the past might be unacceptable or not credible nowadays. So there is a time element, and we wanted to highlight that you should be aware of this development. So I mentioned this, the stand back test. It's not a test, it's a consideration. So no huge work effort needed. But if you have made an arrangement, you're coming to a point where you're saying, I'm in the gray zone, but I have made this and this and this. I've looked at the factual background, I have looked at the history, I've looked at all the details which in my jurisdiction are relevant or in the other jurisdiction by consulting other professional accountants in a foreign jurisdiction. There should be 1 second or moment of stand back to look at the whole and to consider, we call it the wider impact, economical, business, whatever you call it, impact. And to say, is it right? Not to say, I'm not allowed to do so. It's not about a prohibition. It's about a consideration for your own purposes, because your own reputation might be at risk. And you should have a wider scope of advice, because clients nowadays are expecting a little bit more than just to say it's right or wrong. Perhaps it's to say, oh, if you're going this way, it will take you some effort to convince tax authorities. It might be a dispute of 2 or 3 years. And in the meantime, you're allocating resources to that instead of making business. I'm very simplistic now, but you know what I mean. It means perhaps your customers will not accept it. And we are always taking in this context the so-called Starbucks case. It was a UK case. And you all know Starbucks, the American global corporation. Coffee, it's difficult to talk about Starbucks in Melbourne, I think. But you know what I mean. There was a structure. I'm simplifying it. A US-based company wanted to go to the European market via UK, but they don't want to pay taxes, so they went via Ireland. All 3 jurisdictions were happy with the arrangement, so everything fine. But still it was in the gray zone in the end, because the customers of Starbucks recognized that there was a tax rate of 0.00 whatever. They made a fortune in UK because at every corner you find a Starbucks. And the tax rate was too low. So there was a boycott by customers, and voluntarily they paid millions of UK pound sterling to the government to end this boycott. I'm not saying it's our responsibility to say it's wrong or right, but to include this, for example, to say such a low tax rate may be great for you, but is it sustainable? Is it good for your business? Because in the end, the advisor of Starbucks was very heavily criticized, although he has done nothing wrong in the legal sense. And I think to remind you and your client on this dimension, that is something we wanted to integrate, because being ethical, something different than only to follow the laws. So there is this judgmental issue, and we want to highlight that there is a judgmental issue, and we're not saying, yes, you have to do it, or no, it's prohibited. Be aware of your judgmental responsibility. So I think two very short mentioning also the disagreement with the client. There might be a situation where you are saying, perhaps it's a gray zone, but I don't want to be associated with this. We're encouraging also to think about, if you think it's right to do so, but we want to encourage you, whether if you made the decision, I don't want to be associated with the client, that you could also end the relationship with your client. And as you know, documentation is quite important, but it's in the interest of the professional accountant to make some documentation on that, because I mentioned the timing issue. 10 years later, you will be criticized for doing something which was probably okay at that point in time. So we are not saying it's mandatory to document, but we are encouraging accountants to document somehow this judgmental. Okay, that's a short look at this tax planning standard, which will get into force formally at the 30th of June of next year. And we have next week some global webinars, the 13th and 15th of May to make our audience aware of the main changes. And then in summer or in June, we are starting videos and other outreach activities. And you know, we have a basis of conclusions to each and every section, so you can also find examples there. So we are now rolling out, and hopefully we will get some positive response from you, and the implementation. You are responsible for the implementation. We have some people here very much involved on that. So we're looking forward for your feedback. Thank you very much.
Thank you very much, Jens and Gabriela and Channa, for the very comprehensive overview of the challenges we face, sort of at the global level, and what is being done in the construct of international ethical standards. We have some time now for a conversation, and more of an informal conversation about some of those challenges. We have some questions here, but I'm going to put the challenge out to the audience as well. If you do have questions, now is the time to ask. I'd encourage you perhaps not to, well, you might want to pose an ethical dilemma to seek some advice from the global heads of international ethical standards. But if you have comments and observations about some of these issues, and I think particularly around the themes that Gabriela spoke to, around sustainability, of course, firm and culture, and the important area of tax planning as well. So we'll sort of keep our conversation around those themes, but encourage if there are other thoughts and observations anyone has, that will come to those as well. So I might kick off actually with a question, and I'll pose firstly to you, Gabriela, around the issue of sustainability. And as you spoke about the breadth of the issues, the breadth of sustainability reporting, the rollout of standards, means that we're going to have naturally many other disciplines interacting traditionally in our profession that was once seen as perhaps more of an exclusive profession that it is transitioning towards. So how will we go about, in a practical sense, applying ethical standards to groups of professionals who are outside of the traditional historical net of accounting?
Well, not easy. Thank you very much for that question. It allows me to explain a few things which we think should be very clear. First, I think that your question relates to the profession agnostic nature of the IESBA standard, the ethics and independent standards for sustainability assurance that the IESBA has developed and is now consulting on, has been developed in a profession agnostic way, like China had the opportunity to say. Due to a regulatory call, but also because we consider that this was the product that we should offer to the community. Now, this doesn't mean that in every country and in every jurisdiction, these other professionals, non-professional accountants, call them other professional accountants, independent providers, whatever, not in every jurisdiction will they be allowed to provide sustainability assurance. And I think that the case here in Australia is that the proposal which is on the table now is for them not to be active in this space. These are jurisdictional decisions on which IESBA has no influence and does not want to have any influence. So you ask, but then why did you develop the standards this way? This was because in some other countries, different things will happen. Globally, there will be many situations where independent providers of sustainability assurance will be doing this job. There are countries where they currently account for 90% of the sustainability assurance reports, and they cover an incredible number of sustainability assurance reports already. We cannot believe that they will leave this activity like that. So we needed to provide something which, in the cases and in the jurisdictions where these professionals will be authorized to provide sustainability assurance, they will be subject to the same framework as accountants. This, of course, from your perspective, possibly brings into consideration the question of level playing field, of the accountants not being subject to a framework which is more requiring or more burdensome or whatever than the others. But for us, as a standard setter, as an international standard setter, this links to the public interest. The final goal of sustainability information is to provide a baseline for investors and users' decisions. They need to know what's in it in each company, what's happening to make their investment decisions, disinvestment, user consuming, etc. So this ultimate beneficiaries of this information, consumers, users, investors, should be equally protected against biased information, incomplete information, or greenwashing, irrespective of whether the provider is a professional accountant or a non-professional accountant. This is what the public interest requires, and this is what we are offering to those jurisdictions, regulators, policymakers, whatever, who will allow these non-professional accountants to be active in this space. Even in the countries like apparently maybe the case in Australia, where they will not be active, the world is completely interconnected. It's global. So Australia, like any other countries, will receive the impacts of entities who are based in other countries where the framework is different, and in one way or another be impacted by this. So this is the why. Now, the how. Is it going to be easy? No, it's not going to be easy. To be very frank, all this is very complex to all of us. Sustainability is new. It's new for you. New in the sense of standard setting, applying, accounting, and etc. It's new for you. It's new for us. So this is a journey. This will be a learning process. We are still very early in the learning curve, all of us, and this is clear to all of us. Of course, the standard that we have developed is profession agnostic, but it's still a standard on reporting. So there is a lot of concepts, a certain framework and a certain approach, which is typical from the accounting services and from the traditional reporting framework. So for these non-professional accountants, it's not going to be obvious, this framework. There will be a learning curve for all of them, and the IESBA is very much committed to provide all the necessary support to them and to professional accountants as well. So we are planning to issue guidance, helping all the providers applying the standard. We are starting to work on some capacity building programs and plans. Of course, we are a very small organization. We will not be able to do it alone. We will need you. We will need your organizations. We will need, as we are already doing, the UNCTAD, IOSCO, ISSP platforms for capacity building and use them to address our stakeholders. Now, last point, one of the difficulties that has been raised in this respect is enforcement, monitoring and enforcement. And this is again a decision to be made by the jurisdictions in respect to which structures and which frameworks they want to have in place when these non-professional accountants will be allowed to perform sustainability assurance reports. This is not the IESBA. For the IESBA to decide, it's for the local jurisdictional decision makers. And this is happening already in some places. I always mentioned the case of France, where they have finalized, and they have already have in place a system where the non-professional accountants are included in the same registration, learning, education program as accountants for sustainability assurance, and subject to the same regulated, same oversight and the same framework.
Thank you for that. And I think the points made around non-professional accountants coming in to engage in the assurance activities very interesting and timely for us. I know our submission has spoken to those challenges as well. And thinking about this issue, looking at it through the lens of small and medium practitioners, we've maintained for some time that this is an enormous opportunity for small and medium practitioners. Because I suppose I'm making a comment and invite perhaps a response, if that's okay, Gabriela, but I think what we are wanting perhaps to avoid, if I could say it that way, is that we don't just see public interest entities in the focus on PIEs and the focus on large firm networks, global firm networks, but we are seeing not just profession agnostic, but an opening up of sustainability assurance to all practitioners, including SMEs and SMPs.
Fully agree. This is for the benefit of the final result that we want to have with this framework. this diversity and this opening the market to the smaller ones, diversify is actually a factor of an element of quality and certainty.
Yeah, thank you. Yes.
If I may add, I can give you an example in a jurisdiction in Europe where we have now introduced very strict sustainability reporting mechanism for the listed, but also for big companies. But as Channa mentioned, there is a value chain. So many small and medium-sized entities, which are not under the framework, but they are in the value chain of a big customer, they have to provide sustainability information in a certain manner. So it would be a huge opportunity, or it is a huge opportunity for smaller practitioners to take this on board, probably also with the help from some external experts to join forces and to develop concepts of sustainability assurance, because they need some kind of verification in the value chain. You have to understand, or your client have to understand what they need. And that's why it started with the very, very big boys, but it has a lot of influence to the smaller entities and the smaller practitioners.
It's interesting. I might go, Channa, to you in just in relation to your comments around firm culture and governance and that focus, and certainly alive and well here in Australia. And for those who might not subscribe to Parliamentary Joint Committee feeds, we gave evidence after IESBA this week, so it was very fortunate that we could just say, we just went up and said everything they said. But it was interesting hearing the global perspective, and then how do we bring it back then to the local impact? And Channa, I'm interested in your observations about some of that feedback you're already receiving around the firm culture and governance challenges, that we see them play out in the media around, you know, are they too big? What's the 1,000 partner threshold? You know, why is it, as you said in your remark, why is it right in accounting and different in law? So what sort of feedback are you picking up, and perhaps from the submissions or the engagement you're having with the profession about firm culture and governance?
So, I mean, I think we had some conversations in Singapore. I think sometimes we are getting a bit of pushback because people are sort of saying, oh, there's a few bad apples, you know, things are fine now. So, when the IESBA meetings are public, so when Jeremy Hershon spoke in March, he said it's not a case of a few bad apples. So he was sort of indicating that it is quite systemic. And it's also, I think, the opportunity where, like, if you look at the Ziggy report, it said that the audit practice actually modeled best practice, but not so the other divisions of PwC. I think in his report he said incentives really matter. So if you do your performance metrics more weighted towards the incentives, then that's what they will chase, because that will impact the behavior of the people. So at the end, I mean, there'll be a lot of things we'll have to look at. But I think incentives, we have sort of identified that could be one issue. And I mean, at this stage, we are just gathering information. We are listening to people. It's early days. It could be that at the end that there could be recommendations to change the code. There could be recommendations to develop some non-authoritative material to show how to apply the principles in the code, or it could be something else. So we are open to all options. It's just that doing nothing is not an option anymore, given all these scandals we have seen over the last 6-7 years.
And one of the challenges we've found, thanks, Channa. One of the challenges we've found, Cheryl and I just finished a roadshow around Australia with some colleagues and speaking with our divisions and interacting with hundreds of members. And it's fair to say most of our membership is in the small and medium practice or small and medium enterprise sectors. And in fact, the evidence we gave to the parliamentary committee was that, and it's a very particular Australian terminology, but said, and it's a very technical term, where members told us that they had a gutful of it being tarnished with the same brush, tarred with the same brush, in terms of the the impact it's having on them, and they go into their communities, and people don't see make a distinction between small practitioner and big four partner. They just see accountants, and they say that everyone's in the same category. So we made that point to the Parliament. But the challenge for us is how do we then bring these issues and challenges back to SMPs, because a lot of the global conversation is understandably, because of the size of the market, is focused at the big four or big 10, big networks. But Jens, in the tax planning space, how do you see by 30 June 2025, what advice would you give to our members here from an SMP perspective about applying new standards, new guidance?
As I try to describe, it's not rocket science what we are introducing. You could also, it's a good faith approach and bring back the fundamental principles into the tax planning arena. And I think the difference to bigger organizations is that in the smaller practitioner firms or partnerships, there's a close communication between the auditor, the assurance people, and people are doing both or many of the things. So they are aware of the overall, what to say, architecture of our ethical standards. And I think besides the fact that there are in some jurisdictions boutiques who are very specialized in global tax planning arrangement, this is an exception. There are in Panama or in other jurisdictions specific accountancy firms doing that, which are smaller. But normally the global advice is given by bigger ones. I think it's not such a huge challenge, but as you mentioned, the reputational impact is for everyone. And we tried also, even though this standard is only for professional accountant in the old style, we tried to be as general as possible, because we had many outreach activities with the lawyers. Because in many jurisdictions, tax planning is done by lawyers and not by accountants. But because accountants are somehow involved, even though they are just doing the compliance work at the end, they are associated with these type of works. We try to be clear that this standard is also applicable, for example, to law firms. And they are now under huge pressure to do something. And they're looking quite carefully what we are doing on the international level, International Bar Association. So by that, we try just to set the tone a bit. And we think that's not a huge burden for smaller practitioners to implement, because I would say that what 90 or 99% of the colleagues are doing if they are in a situation we are describing. Perhaps we are enhancing, and that's something, if you have a new standard, you're going to your colleagues, you are making some CPD on that. That is encouraging and I think important to have a thought on this, but there is no huge system to be established. The problem, and that is a connectivity perhaps with the culture project and the sustainability project, is a little bit the tax planning arena, looking how your firm is organized, how your partnership is organized. And we have heard from the discussion that there are sometimes strange structures in the bigger end in some jurisdiction to avoid the applicability of certain regulation. There can't be, because it's a perception issue, and perception is reality, and it's not a legalistic issue. Oh, it's a firm which is not under the remit of the code. We are doing tax advice via this structure. That is not anymore feasible.
It's very interesting. I think that the challenge also, I think, for us and Gabriela is when we look at the application of the code, we look at the extent and the length currently of the code as it currently stands, and we add in sustainability, we add in tax. I think we've had some conversations informally saying how many pages does one need to be told to do the right thing. In the Australian context, of course, practitioners have not just the code of ethics, which is APS 110, which is driven out of IESBA as well. We've got the Taxation Services Act code, and then we impose a professional code of conduct on members in terms of their conduct. The TASA code, 17 points. So just an observation from you about how much do we need in terms of guidance? How many volumes and pages do we need? Because should we be planning for an artificial intelligence section or chapter of the code at some point?
Help you use the code.
to help navigate it.
This is a good comment, and this is probably something on which the IESBA will have to reflect on the future. I have difficulties here in responding as IESBA Chair and Gabriela. So my response is going to be the IESBA Chair response. But I'm joking. But actually, we understand that it's an incredible volume of pages. It's massive. It's sometimes possibly very difficult to process in its completeness. But at the same time, we are always being required to provide more guidance, to provide more examples, to provide more lists of situations. So we are always in between this tension between a very understandable request and call to be simple, nimble, child principles, etc., and the other requests, which probably some of you will convey to us in some areas, more guidance, more material, more everything. This is not only a standard setting question; it's a regulation. It's the same in regulation. But we understand that in the future, probably not in the immediate near future, but sometime we will have to address that problem and see if there is anything that we can do in that respect to make the life of the users of the code easier. I don't know if it's an IA tool. I don't believe that that's something that we can do. I mean, your question is how many more pages do we need to be told what we need to do? It's actually not a matter of pages, but what, for instance, Jens was saying about these tax planning standards, we believe that they are necessary. And from our conversations, this is very early days in rolling out these standards, but from some conversations, not with you, but with other conversations, we conclude that what's besides those standards, which is, as Jens was saying, something that 90% of the professionals should not need to be told because it's what actually they are doing on a daily basis in their professional practice, etc. But some others aren't even aware of that. So what we are trying to do is to bring to a very objective way something which is not a burden, which is not an additional system, which is not additional requests to do something this way or to do more or whatever, is to put the right behaviors in a very clear way and set a number of standards which are recognized everywhere. And this sets consistency in terms of what's the expected behavior. But again, I recognize that challenge mostly for small and medium practice entities and professionals, and we will have it in our agenda.
Yeah, thank you. And it's one of the reasons, just as a very, very quick 10-second advertorial, the IPA, we were one of the first, well, the body to move to make ethics CPD mandatory each year, precisely for this point around giving guidance to the professional, because it's a space the professional body needs to be very active in terms of giving contextual advice. Channa, just a comment on IESBA on one page.
Do the right thing.
One line.
But just to add to what Gabriela and Jens said, so when we were doing the tax planning project, when we looked at codes around the world, there are only 3 countries that had codes for tax services. So the US CPA, the UK PCRT, and APS 220 in Australia. So those 3 were documents we looked at when developing this tax planning standard. So I think for those countries, this is not a huge jump. But for a lot of other countries which didn't have anything, it It'll be a big
step.
jump.
Yeah. Good point. I'm conscious of time because our guests need to get to the standard set of boards. Thankfully, it's not that far away.
Yeah.
But are there any questions from the floor? I've got a couple of others, but and anyone have a question from the floor? Looking at you? Yes, please, Dan.
Just listening and a lot of experience over the years, public practitioners in the room, is that the level of reliance on the ethical standards and the relationship with quality of the legislation. I mean, where should accountability be slated to? The legislators or the practitioners? I know it's a bit both because there's varied levels of way practitioners operate. Seems to them to have an example in the Court of Public Opinion recently in Australia, member of accounting practice being held found guilty by the Court of Public Opinion, but there was no commentary on whether on the legality of what he was doing. It seems to be lost. It seems to be something public love. So where should the reliance on ethics versus legislators, who should that be shooting back to? Who should it be shooting back to? It seems at the moment it's shooting back to the practitioners and not the legislators.
Please answer.
I think it's a difficult question from a foreigner to comment on Australian specific situation, but generally, I think concerning the tax planning grey zone, I think it's a quite unclear line. I will tell you a case from my jurisdiction where there was a tax planning arrangement which was firstly perfect 10 years ago. The courts decided fine. The same court 10 years later decided it's a criminal act. So without changing the laws, it's just a perception, because at that time, in the case of double non-taxation, they said, oh, clever. You had a good advisor, final decision, it's okay. And no one challenged the opinion. But 10 years, and that's why it's difficult to answer, because sometimes it seems to be only in the judgment of the profession to say what's the right thing, but by the sudden, because of the change environment, can also say a younger generation or next generation of judges are occurring. They have a different perspective, a bit different background, experience. I'm not saying good or bad, it's different. And the same statute or the same legislation is differently interpreted. That's why it's a difficult question. But I think normally you should say, if there's a clear line, there should also be the responsibility for the red zone. It's courts, criminal courts, in this case, that I mentioned. And in the other one, it's whether it's a regulator or a professional body, that depends from jurisdiction to jurisdiction, because the self-regulation is in some jurisdiction more advanced than in other ones, but those who are responsible for the ethical standards.
Yeah, and I think, I mean, the public case that we're all very familiar with is, I've been in the media, of course, the PwC matter. That, you know, when we talk about breaches of the law, I think pretty clear breach of the law in relation to confidential information and use of information. But I think the challenge that becomes, how does the legislative, how does the legislature respond? And I think we're seeing at the moment, we're living that in the volume of response that the legislators are coming down with. But it's an interesting, very interesting conundrum. Sorry, yeah, Miles, just a couple of minutes, sorry. Yeah.
Which is very quick, and building into that, right, is also how much of the regulators, so legislation is practitioner, define how much are they getting involved, because often their interpretations are not necessarily those that they get set down by the regulator. So they'll be trying to protect the jurisdiction and take a particular aggressive approach to that. And as a consequence, the practitioner possibly push back on things out. The other question too, is what you're doing. We put out the two pillars of BEPS that base erosion rock duty, and it's simply existed as an economic construct at one level. So it's very, very good to see the role that the whole ethics and what have you around that picture, because otherwise it just becomes rather than a lawyer versus a lawyer, it's a lawyer economist and accountant or whatever. So I think that's pilot, bringing those things related at the same time is crucial. Sorry.
No, that's all right. No, that's okay. You want to comment? I think, or I can do the Q&A thing and take that as a comment, Miles. But thank you. Good observation. So in the short time left, I'm going to pose a question without notice to each of the panelists, just while people might be thinking of one last question. And that is if we fast forward sort of to implementation, successful take-up, profession agnostic standards, sustainability assurance, all that, what does success look like from IESBA's perspective? Does it mean IESBA winds up?
Well, I think that how success will look like is achieve a level of a high level of implementation, with truth implementation, but mostly seeing the ethical behaviors becoming more visible in the space of accounting and accounting firms. What we really aim at is not to be famous, it's not to count the number of jurisdictions where the code is implemented, which is of course important. Is really to achieve a consistent global international framework, which really triggers the uphold of ethical behavior. How we measure that, difficult to say, but not everything that is good is immediately measurable. I think that we will see in 10 years' time.
Thank you. And perhaps Channa, do you want to make?
I think, Andrew, because of what has happened in Australia, there's also an opportunity to rebuild trust and the sustainability and from touch and governance in due course. It's an opportunity to build trust in information. And the fact is, while there's a lot of people pointing out you're making the standards available to non-accountants, the reality is the accountants are in the box seat, right? Because the accountants have already developed the systems to comply with Part 4A of the code and the existing principles which we are extending to the other practitioners. They have to catch up while the accountants are in the box seat. So it's a big opportunity.
For me, it would be that it's seen that the profession is part of the solution and not part of the problem, because we have something we can demonstrate with the proper application of the code that there is reason for trusting the profession.
Excellent. That's a great way for us to finish. Can you please join me in thanking Gabriela, Channa, and Jens and Jeff?